Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So second down day, pretty potent. Not an easy day because we had the size of the move on Friday that pretty much knocked out all the momentum traders. Anyone who was looking for a move above that breakout area, pretty much either had, 15 to 45 to 60 minutes to react on Friday to get out of their longs because obviously Brexit happened and every moving average got sliced, and that we have a hole the size of Texas in all the different indices. So that's typically a pro gap to be bearish. So you got to figure out, do you hold your nose and go in the water, or do you get out on Friday? So if you got out on Friday, maybe today, let me try S&P Cash 2000. Let me try a little bit below with the oscillator down minus 60, which is the highest oversold reading we've had all year. There was really no bounce. So with that being said, you look at the chart, it's hard just going out blindly long because we had two of the biggest down days combined for 10 months. Okay, because we were near highs, which we shouldn't have been. We were near highs because I guess they were first they were going to use Fed raising rates as a catalyst, and that didn't happen. And on that jobs report, which showed 38,000 jobs, we got hit. Then we came up here thinking, we held in, they'll stay and Europe will finally bounce and we'll get above this level, and that didn't happen. So now here we are below all the moving averages. Now we took out the 200-day, took out this prior one, and and then we're below this upper range. So from the lows of the year to here, all we've done so far is take out some of the fluff and some of the momentum. This does not feel like a buy in the whole, buy. It just doesn't. It didn't feel like it all day. I guess, hopefully we get some kind of setup tomorrow that's more tradable. Here you have 1975, and this was kind of where the real part of the rally started. Like you had your double bottom, you had your red dog reversal right here, and then this is when part two of the rally happened, where this was so fast, this is where you finally had time to get involved, and then boom. Okay, so now they just took the fluff out, so now the question is, what's next? So, what do we know? Okay, we know today's low. Today's low is 1991. Okay, kind of coincided to where this broke out. And then, under that we have 1975 and then this 1950-ish area. So the question is, what kind of bounce do we have, and, where does it take us? And, we probably could see at some point a bounce back to this area, or our first bounce back to here. But the question is from where? Do we open up there on a gap up tomorrow, which would be horrendous and not fun for us because, I know for me, I'm not taking out longs. Remember last time when this happened here? Okay, broke below, engulfed the range. You had day 2, and then you had day 3, huge, and then actually day 4. So this is like day 2, and same thing here. You had this upper wedge, and you had this little reversal try, and then boom, 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 all the way below the level. So right here, with the DAX and Europe near 2016 lows down 13%, the S&P is only down 2.25. So we're going to take it day by day. One thing that could happen, if you want to hear just scenarios, think about the United Kingdom's debt got downgraded from AAA to AA. So if all of a sudden Europe opens down tomorrow and reverses and goes green to get an oversold bounce, because it is very oversold, all of a sudden Europe's up 1% or so, and then boom, our futures are up 15 handles, and then we get the trade taken away where you could buy them for a reversal and try and get a little follow through. So which that's a trade that nobody wants, so I wonder if we get it. So with the oscillator minus 60, hopefully you're not as short tonight as you were on Friday, if you were short Friday and if you're short today. If you were testing longs into the close and said, okay, I don't care, I'm not going to be perfect, because if we're down 20 handles, I'll try and buy them down 20 tomorrow. But I want to be involved just in case we retest the 200-day, then that's the risk you're taking. So anyway, let's go to the Qs. Qs, broken sector, downtrend here, never made new highs, well below this support there, and didn't give you much off the lows. This was one support I wrote about in my note, which we kind of held around, and I guess we'll see what it does there. Tomorrow we'll see if we get something around this pivot. The low here was 101.75. Below every moving average. No reason to be sitting it in the swing, but it's oversold enough where maybe we'll get some kind of bounce, but we have to get it the way we want it, or hopefully the way we could play it. So what would that be? Maybe a gap down, take this back and reclaim it. A gap up tomorrow will be hard, or harder. because it's down so much too, so it would be hard to just do the H sell setup. The Russell, you know, we said that I could play catch up fast, and here you are right back into this support. Slice through the moving averages there and close below this pivot, and now you know, this fluff has been taken out. Some people think that maybe we can get some kind of bounce here, and then all of a sudden you have you know, head and shoulders formation again. Last time it happened, it failed. But anyway, you're into some key support. So if you did get short on Friday, hopefully you covered a little bit, and then tomorrow we'll see what kind of setup we have. In high beta tech land, nothing really special. Amazon did hold the 50-day again. Okay, so you know, in the extreme hole, you've been able to buy some Amazon lately. And if you just looked at the chart and didn't think about the whole market environment, you would say this still pretty constructive off the lows of the day. That's a decent doji. Facebook, horrendous. I guess no, a good short if you've been shorted. You know, this broke this upper spot here, lost the 8 and 21 day. What do we do when momentum names break the 8 and 21 day? You get out. You do not sit in them, especially if you are a trader. Some people might have even got short the day of the LinkedIn, and then now all of a sudden, you know, it's coming into the 200 day. So hopefully tomorrow it would be nice if we got a swoosh into the 200 day, that we could, you know, get some kind of viable bounce. You know, today. It broke below this 111 fast, which was Friday's pivot low, and some guys got short and you made some decent money. It did go through 111 down to 108.23. That's, you know, 2 3/4. That's a decent trade. It's below all the moving averages. There's no one thinking so crazy long here, but now you could just be tactical two-way based on the action or what's going on. And I guess if we, let's see what happens here. If we draw this line, you know, somewhere around here. Could be just a decent scalp long, potentially. But again, momentum left there. So in a sea of red, or, you know, in a down market, there are still some setups. So, you know, again, we talk about how broken Tesla is, but Tesla today gave some of Red Dog reversal. It went green first before the rest of the market, and I know it's a broken name. There's no momentum. You know, hopefully no one's stuck. But today, if you wanted it, if you were looking at it, and it was definitely something that I wasn't thinking should happen in a weak market, but it did. What did it do? It traded below the prior low, traded below here, which was 189.73. After a move from 240 all the way down here, maybe some dip buyers said, I'm going to try it. So anyway, made a low at 187.87. So the way you play this trade is you buy a little bit when it recrosses, you put a stop at the low of the day. And if you're good enough, you walk away, and you could have made yourself almost, wow, closed about 9 points on a $2 risk. And the good book actually says, you know, you take a little bit home long, because, you know, not only did it, you know, reclaim the prior low, it actually took out the prior high, so it gave you an engulfing action. So maybe people think that, you know, Tesla's not going to take over Solar City, or maybe it's just getting a bounce. But either way, you know, with the Dow down 300 points at 280, whatever it was, there was a decent one-off type trade. So got to figure out how you want to do things. Do you want to short Facebook when it goes below 111 and stays below 111 for more downside, or, you know, which was a different type of trade within high beta tech land, or, you know, all of a sudden Tesla didn't go down, the futures go down, and you're like, you know, there's a lot of shorts caught in there. Maybe we get a Red Dog reversal just for a trade, not for a new trend, not for new highs, not for anything else, but a trade. And that's what we're looking to do here, is trade and net money and create cash flow. So that was that. You know, you look at Google, still, you know, broken name. It's been broken for a while. It did come off lows last time. You know, you had a pattern trigger, which was when it broke this ascending channel here, and then, you know, Google wound up, you know, closing or taking out the 9-month range. Okay, so today was, you know, there's an analyst talking really bullish about it, and what did it do? It, you know, it held this spot, and it closed off lows. Doesn't, you know, if you're long this for overnight, then you must have a Google thesis. You know, at this point though, it's a broken name. It's not a swing trade. If you've been in it for 4 or 5 years, okay, that's something different. But ultimately, you know, this is below the 200 day, below the 8 and 21 day. This pattern broke here. So, you know, if you traded it from the long side into support, it's just a day in the life of the stock. And if you're taking it overnight, okay, you know, there's risk there. But if we're up tomorrow, you know, you probably get a few dollars. So, you know, but then you turn to something like Netflix, right? Netflix has been broken ever since earnings. There was really nothing to do here today. You know, closed basically on the lows, unless you were just shorted, and that's cool too. Last time there was a shortable pattern was right here. Okay, this bear flag. You know, this was one streaky move that squeezed out all the shorts, and then once it couldn't hold the 200 day, it just became a no trade again, or a short, and then boom, and now boom. And now we'll see if this wants to get back down to the 2016 lows. Gold gapped up and went red, and then kind of hung in there. Those gaps from Friday held. So there was like a little two-way action. I think more people probably thought that we were going to rally today because gold went red and the VIX was also red, which was kind of a head scratcher. But all in all, the GLDs spent the day above this gap, made a little, higher low, and still looks really constructive. NUGT could have traded both ways. The opening strength was sold, and then what happened? It came in and held Friday's gap. So, big ranges there. We'll see how long it stays in here before it decides what to do. And that's that. Overnight, you probably, I think the risks are skewed both ways. We've just had a 2-day down move, the biggest in 10 months. So if you're still short, you might have to deal with an oversold bounce. If you're trying to buy a dip and you said I'm going to buy today just because we're around 1990, and you got it in the back of your head, say, oh, I have to be careful because maybe we could see 1975 or 1950. But the oscillator's minus 60, so you can handle some pain by taking half a tier or a tier 1 into the overnight, because we might be up if Europe doesn't go down on that downgrade. So a lot of little things to consider. Or you could just be flat and try and play the ranges and try and make some cash flow. I think Friday was a much easier trading day than today. At least Friday you had a nice up move that was shortable to make new lows. Today just had like a bleed lower. Then you had one sharp move, which failed, and then one sharp move down into the last hour that failed, and it was easy to lose money both ways. So on a day like that, there's nothing much you could do about it except for go home, burn off some steam, and attempt to come back in tomorrow. I'm flat heading into tomorrow, and hopefully, for me, my best scenario would be some kind of gap down from something unforeseen, one more spike in the oscillator into that level I've been talking about, the 1975-ish, and then get a cleaner reversal with more participation, because there was just too much weakness in oil today, too much weakness in the banks. Things just weren't lifting. And then even same thing with high beta tech. There was no extreme relative strength into the futures going lower. So it really just was another day where they just took some of the meat out of the market range to maybe get us closer to something better or more conducive for us to trade. Have a good night. I'll see you tomorrow.